What is going on, everyone? It's your boy Tony at the weekly close, here to report on the art of the chart and share the latest trends, thoughts and analysis from different minds in one place. So let's look at this quick roundup for the week. We've got week 6, altcoins to falter short term and how to support market maker activity. So let's kick this off. The first video we're going to take a little look at is from Plan B's new channel, with the title being Plan B 7 Bull Signals. So let's cover a few of them right now. The first one that he shared is the famous stock to flow model. This is a model that marks the asset in the white line of the stock that is currently in circulation versus the flow of the asset that is still available in, for extraction. And obviously, we know in terms of Bitcoin, it's got a capped supply, so hence the kind of scarcity value, and why when you're looking at other altcoin projects, you've obviously got to be aware of the amount of coins that are kind of being created in any one of those projects. But what's interesting about this particular graph is how it marks, just looking on the side here, is months until, that says behind there, next halving. So when we the countdown being from the red to the blue, right now we're in the green, the halfway point to the next halving, the halving of the rewards of Bitcoin that miners are given when they participate in securing the network. So kind of just looking at this, other than in the earliest of times in 2011, where kind of green went to kind of light blue in the kind of towards that countdown. Otherwise, from green to light blue, has always been traditionally the kind of the pullbacks, the bear markets in price. There's still being a mark of price on a exponential scale. Look at that, on a logarithmic scale, i.e. 10x, 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 10x. And that's where we are, right behind that cursor at this moment. We are approximately at the kind of halfway point in the green towards the next halving. So it'll be interesting to see, do we continue to move up to kind of pull back to that average of the stock to flow model, which has always got a lot of attention over the years, simply just because of, well, look to the top right, that's suggesting solid 6, potential 7-figure stock to flow model in the future, and that's just a 2025. So that's the first of the bullish signals. The second is this kind of mapping, since the earliest inception of 2010, 2011 of the RSI, the relative strength index, the kind of the buy and supply momentum indicator behind price. And historically, when anything has ever kind of moved, this is anything when it kind of comes to anything this low is essentially a buy, and anything in the red is a sell, overbought. But anything that's kind of moved up with this kind of velocity off the lows has usually signaled a reversal. So as we can see, it's happened in 2015, 2019 and 2013. So historically, that's always been an early indicator, so one to watch. And equally, moving on to this one, is the percentage of Bitcoin in profit. Again, this is price marked against color, the color being the percentage of supply and profit. And obviously, when you get to new all-time highs, it's a red. Everyone's in profit, so to speak. But what's interesting is that kind of color change at the lows, and essentially you could reinterpret this as the exchange of strong hands to weak hands. People selling at a loss when they're hitting all the lows of the bear market, because nobody wants to be holding on to a loss. But it's the smarter hands, whales, and otherwise accumulating to kind of take price higher to kind of sell at to lock in those profits. But here we are again at historical lows at different bear market cycles, as shown with the kind of the dark blue, and signaling that we're coming out with the dark green. Every single time we've left the dark blue, it's been a sign of coming out of the bear market. So again, it's true, a bullish signal. And then finally, one of the final ones that I'll just pull out of this is just this kind of mapping of price against the realized cost price. The cost of which Bitcoin was acquired in total as an average of across all of those in circulation. But what just needs to be kind of looked at here is looking at the red dots, which are Bitcoin price, the kind of historical proof of whenever that has gone above not only just the realized cost price, but this 5 monthly average, all of these moments. This is usually the early signs of a reversal, as we can see here, 2015, 2018, and the beginnings of anyway down here in 2012 and 2013. So worth watching in combination with those we've just mentioned. And then the final kind of one is just that we've got to keep an eye. This being a kind of not manipulated, but a rescaled S&P in grey over the Bitcoin price. Is just remember that the S&P is a proxy for all that is macro, but still we have the RSI indicator, the relative strength index, over the kind of Bitcoin price here. But it's just pointing out these bear market blues that do coincide, and in these instances anyway, quite clearly with what's going on in the S&P, this pullback included. So the outflows of money of all that is speculative, usually at these pullbacks. But just looking at that, you can see there's a head and an inverted head and shoulders. So and we're pulling away. So if we expect continued strength in the S&P, expect continued strength in Bitcoin moving forward. Another video posted by Glassnode, just kind of looking at that on-chain activity. It was a great webinar called Navigating the Late Stage Bitcoin Bear Markets with On-Chain Analysis. Excuse me. And what was just great was this is kind of a really useful overview of different metrics, based on the on-chain activity, just to get a kind of an estimation and an understanding of how previous cycles have operated. So the first one here, there's quite a few models that overlooked pricing, on-chain activity, and profit and loss, as well as supply. But the first one that we have here, which is quite a well-regarded one and circulated in the community, is the Mayer multiple. And the Mayer multiple itself just being calculated by dividing the Bitcoin price by the 200-day moving average of the price. So this is the Mayer multiple just below. As you can see, the kind of hint as to why that's kind of lifting is that price has exceeded and broken above the 200-day moving average, which is something a lot of people have kind of pointed out at the moment. But we've got this kind of pull away on this axis of the Mayer multiple. How many times has that kind of traversed at that kind of velocity? That's just one to kind of keep an eye on from a pricing strategy point of view. And then one we've discussed, in terms of supply and activity of addresses anyways, new address momentum. We won't touch on this too much, but 30-day over, breaking above, testing and continuing above the 365-day, the yearly moving average. So suggesting kind of newfound activity there. And then the final one is these kind of two comparisons at the top here of the adjusted SOPR on a kind of 7-day EMA and a 30-day EMA. So just noticing that's obviously from April 2021 to Jan 2023 and 2012 to 2022. And SOPR stands for the spend output profit ratio, which is computed by dividing the realized value in USD divided by the value at creation. So it kind of just gives you an indication of how much of that which is in circulation is kind of simply price sold versus price paid in the markets. And while on a kind of 7-day average basis on this chart is suggesting we're starting to pull away, we still haven't kind of broken into the positive above that zero line, but those are the early indications of bull runs, is when we do kind of break above that with the spent output profit ratio. So that's probably one of the things we'll be keeping an eye out for the further green light. And earlier in the week from Marzel, there was the video "Time to Buy These Altcoins," which is an interesting video just based on this chart, the total free, which is just the altcoin market a combination of all coins, well, basically the entire market cap, excluding Ethereum and Bitcoin, just for the absolute weighting. And this kind of suggestion that, with this triangulation that's happening and this kind of suggestive breakout, maybe retest and continuation, whether it was a time to start kind of jumping into the alts anyway. And the kind of reason and suggestion for that was, the promise of the 200-day EMA sitting below price, and being, fair enough, tested quite a few times and now breaking that formation. But I've just added my own dashes here why quite clearly, to be honest, a divergence in the RSI. So that getting weaker, lower highs, while price was going up to with higher highs, so suggesting there was going to be an imminent pullback. And truth be told, it has pulled back. So I know there was talk about, well, let's take a look at DOT, because that's sitting above its moving averages, as well as Algo, that's sitting above its moving averages, but both have pulled back since, as the RSI was indicating. And to be honest, the RSI on both those were diverging. So that's following suit properly. And then the final one we're just going to quickly touch on was just from Traders Reality, which is just, I think, just a real simple reminder for anyone who's just kind of trading. This is applicable for any asset. One simple trick to make money trading. And I guess this is just kind of a reminder in the importance and celebrate just kind of what is a great indicator on TradingView. Right now we've got here Tino just kind of pointing out, pulling back the charts, and just pointing out the kind of importance to be considering volume behind candles, and just to understand, and this is what the title is referring to spot market maker activity is this manipulation on the 1 hour. So here is just the example of a big spike in a green candle, and just by the look on his face, the kind of suggestion that retail might be thinking, great, this is the breakout, maybe it's the breakout of a downward channel, and we're going to start seeing the breakout to go to the upside. But as he kind of just points out, just by playing the rest of that trade out and turning on the Traders Reality indicator, we can see that this was a green candle on that indicator, which says it's twice the volume of the last 10, the average of the volume of the last 10 candles. And just look how much that pulls away from the 50 EMA, breaks out and rips straight back down to the 50 EMA. And the kind of question is, even maybe some people are thinking that's going to be a continuation in price still to the upside, as it didn't break down further here. But it's just that reminder that there is big money out there who will look to make these sudden moves to build up price just to initiate the sale, and in this case, the sale much lower as it kind of crashes and continues on the 1 hour chart. And what this just kind of points out is it's always been, if you look at fair value gaps, or you're following vector candles in general, vector candles represent imbalances in the charts, and imbalances are usually things that are eventually recovered, much like gaps, but in stocks or Forex and otherwise. But in this instance, we're just talking about so in here where we've got our double train track, the kind of the green candle up, the pull of the red candle. The difference in this instance, it's supported by the 50 EMA, and it supports that. And the reason why we might preempt a little bit of that kind of recovering to the upside is the 50 EMA on the upswing, but recovering this vector region where there is potentially a pent up liquidity. But I guess this is the point of remembering where prices come from when we're looking at these moves. So in this instance, again, the build up, the ripsaw, to the downside, and then the slow building back up. So, the building up of the sales, and now the building up of buys afterwards. And that's just how, just looking at those, you can just tell, that's what just tells the difference, looking back, of when turning on that indicator. You can almost tell when you see this kind of activity, that it's going to be, you know, the bright green indicator, bright green, bright reds, suggesting just those real big imbalances in volume. But yeah, that's again that recovering of that region earlier on, as we're showing just there. And in this instance, yes, same again. So this is just like a short catch up this week, guys. You know, I hope to cover much more. Obviously got the other video just covering like the total breakdown of time frames and, you know, some short term predictions obviously on the Bitcoin charts. But, you know, if you like the content and want to keep supporting, guys, please like, comment and subscribe, and I look forward to touching base with you soon.